Now to the economy and another big drop in stock prices driven by job numbers that actually put unemployment at its lowest level in 7 years. The August jobs report shows employers hired 173,000 workers last month as the unemployment rate fell to 5.1%. But that wasn't good enough for Wall Street. Joining us with some insight on this is Michael Regan, editor-at-large for Bloomberg News. Good morning, Michael.
Good morning.
Is Wall Street afraid the Fed's going to raise rates in 2 weeks now? Is that what this is about?
That's certainly part of the story, absolutely. But there's a lot more going on. And the way I look at it is we're sort of spoiled by the stock market for many years. It was this nice, slow climb upward without a lot of volatility, meaning not a lot of wild swings in prices. So a lot of it, there's a certain amount of human emotion involved, but there's also a ton of computerized algorithmic trading that is not necessarily buying and selling based on the fundamental outlook. They're basically reacting to these new increased swings in prices, and they're pulling back. They were basing their trading on the idea that we would stay calm, and all of a sudden we had this big wave hit the boat, and so there's a lot of ripple effects to that, and the volatility is like a genie let out of a bottle. You kind of just have to let it run its course and see where we are when it's done.
But as we've learned, as soon as there are waves, people start getting nervous. What's the advice for stockholders right now?
Well, they do. Well, it's a tough question to answer because it depends on what type of stockholder you are. If you're a trader, you love these markets. If you're in it every day, you're trying to catch the lows and then sell at the highs. For your average, 401k investor, my colleague at Bloomberg jokes it's now a 201k, but the advice you'll hear over and over again from experts is basically try not to even look at your statement. Keep the same plan you've had all along. Remember, if you are contributing to a 401k, you're buying stocks cheap now. So the idea is to basically keep doing what you're doing if you have a long-term horizon.
If you look at the job numbers, though, they suggest the economy is actually in pretty good shape.
The U.S. economy is doing pretty good, and there are sort of glass half empty people that will tell you, well, they're a little misleading, that it's not quite that strong. But if you take it at face value, obviously 5.1% is what they consider full employment or the natural level of unemployment. So from the Federal Reserve's perspective, they don't want that number to get too low because then the economy overheats and we're at risk of bouncing back, rebounding back to the other direction. So it does, make it look like the Fed doesn't really have a good excuse not to raise interest rates soon. Tons of debate and uncertainty about when exactly that will be. And that, of course, is increasing the volatility because some stocks do better in a higher interest rate environment. Some do worse. Fixed income, becomes more attractive. So a lot of people aren't quite exactly sure what to do with their money.
Waiting, it almost feels like, for that
interest rate to go.
Right.
The Fed meetings in just 2 weeks.
Mike Regan, thank you so much.
Thank you.